Hello everybody, this is Toni Turner and welcome to the Market Now as of the market's close on Friday, March the 15th. U.S. stocks rose today, led by tech companies as a report on progress in U.S.-China trade talks lifted sentiment. And on that news, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at our daily chart of the S&P 500 SPDR, symbol SPY. This is the ETF that closely follows our benchmark index, the S&P 500 index. Now we know that since the SPY rallied off of its December 24th lows, in January and February it has flown back up to its current resistance that seems unending, up here at 280 on the SPY and about 2,800 on the S&P 500 itself. Now the SPY has been trading in a relatively narrow range here. From it made a little dip on March 8th to 272, right down here, 272.42. Then rallied back up and closed today. We're at $281.31, but it hasn't quite been able to move up and close above these highs here. So we need it to move up a little bit more here and close up over at least 282. Now, as I mentioned, the SPY is still waiting to see how the China trade scene is going to play out. We've been keeping an eye on the 14-day RSI down here for quite some time, ever since the SPY came back up to these highs. And we can see that even though it made a little dip here on this March 8th low, it's rallied back up to just under the overbought line, which comes in at 70. Now, interestingly enough, it's just a tiny bit under the prior highs up here that did go over the 70 line. So if we really want to nitpick here, we could say this is a very, very tiny bearish divergence, meaning the prior highs on the RSI were higher than the high that it's reaching right now, just about 69, right under the 70 line. But that's pretty well nitpicking. Actually, we still remain in a holding pattern here, and we still are asking the question, can the SPY break decidedly above 280? Can it move, and can the S&P 500 move decidedly over 2,800? And my question is, can the SPY sustain 3 closes above that line? A little pop up and a fall back down isn't going to do it. So if it can sustain 3 closes above, say, 281, 282, then I'll exhale. If not, if it starts lower again, I may take some profits off the table, and certainly I'll become more conservative in adding new long positions. So I suspect here with this pattern and what we see going on, we've had one dip down to support here. If it can't move higher, maybe we see another dip back down to, say, 272, 273. We certainly don't want it to go below the green line, the 50-day moving average, and that's coming in right now at $270 and change. And that should give us at least some potential support here. The 50-day usually does. So we'll keep an eye on the SPY and see if it can break above 281 and stay there, or if it needs to come back and retrace again a little bit more. Okay, our next chart today is one that we certainly keep an eye on in Toni's Market Club. As you all know, the iShares Russell 2000 ETF is the index of small caps, and pardon me, once again, I forgot to add that third zero that needs to come up here for the Russell 2000 ETF. As we know that the IWM fell dramatically down to lows on December 24th, down to $125.84. It certainly rallied from there, rebounded in a strong uptrend, which was very bullish for the market because the Russell 2000 small caps, or the IWM, which represents it, can act as a leading indicator for the broad market. So that's why we keep an eye on it, as again, it can be an indicator. Now, though, we can see, and as with most of the rest of these indexes and sectors, we can see the IWM is forming a pretty strong sector here. Excuse me, a pretty strong triangle here. Now, we could have taken this line, this trend line from the low and drawn it up, but really one technical way of drawing trend lines, if you're going to the lows of a pattern, you usually go to the low just above the lowest low and then connect that to the next pivot line. So we're seeing a triangle coming in here. We certainly have an uptrend line here. The 200-day moving average is acting as a resistance line here, drawing a pretty decent trend line. And we have the trend line, the up line here coming back down overhead, down over February highs. So it'll be interesting to see where this triangle formation breaks out. Now the IWM closed today at $154.76. You can see this lower trend line coming in at about 153. The upper channel line coming in at 157.48, same place that the 200-day moving average is. So we can say roughly there's pretty decent resistance here at 158, 159, certainly for the IWM. It has the 20-day, the red line moving average overhead right now. So again, when it closed today at 154.76, we're going to have to see here. I'm a little disappointed that the IWM didn't come back up like the SPY did. It didn't come back up to its highs, earlier highs in February. Instead, it made a lower high here, at least so far. I'm kind of disappointed it didn't move up that far, but it came back up to the 20-day moving average. So far, couldn't get any higher. So we are going to have to wait and see what the IWM does in the coming week. Again, support at 153 and about at the 50-day moving average at 150. And there's more price support here coming in at about 148. So let's keep an eye on the IWM. Again, it can act as a leading indicator for the broader market. Let's go on to our third chart for today. Today we're looking at the Financial Select Sector Spider Fund, the XLF. The top components in the XLF are Berkshire Hathaway B shares, JP Morgan Chase, Bank of America, Wells Fargo, and Citigroup. Now, like most sectors and stocks, the XLF fell to a relative new low down here, December 24th, rallied back up December 26th, hitting lows here at 22.05 down here. It has rallied nicely from there. It's come back up to its 200-day moving average. It hasn't been able to climb over it yet. The 200-day is coming in at 26.72 here. The XLF closed today at $26.63. It has the 20-day moving average right underneath and the 50-day moving average right underneath as well. You can see this strong trend line coming up, but it has the same pattern basically. Not as the IWM because that made a lower high right here, but pretty close. And again, as most indexes do, coming back up toward its February highs. So if in the coming week we had decent volume on Friday, that's typical. We had quadruple witching Friday this past Friday, or today I should say. And it did have pretty strong volume coming in here. I'm going to see if next week the XLF can climb above its 200-day moving average and then maybe step above 27.50. That is where these prior price highs come in, price resistance I should say, right about 27.50. So if it can start up, I may buy just a few shares. If it can continue moving up over 27.50, and I would of course like it to make 3 closes above that line, I may add more shares to my position. Now, I will have a stop at least a close below the 50-day moving average. I may move it up a little tighter from there, depending on what's happening in the market. But in order to add shares here, the market is going to have to remain strong. and the SPY is going to need to break above the 280 line, 2800 on the S&P 500, and look strong in order for me to put this trade on. We want to know that the SPY, because that's kind of the ruler, or the S&P 500, has strong buying sentiment to continue to support it and move it higher. Otherwise, if it doesn't, if it starts to roll over, then this trade may not look good to me anymore, and I will again become more conservative. So let's stay tuned with that. And now on to the coming week's economic reports. But first, please join us this coming Monday, March 18th, for our next session of Toni's Market Club. We will be celebrating our 10th anniversary. So stay tuned for a special announcement this week. We're going to have a free webinar this coming Wednesday. It will be like a Toni's Market Club, a little shorter version, but those of you who aren't in Toni's Market Club can see how it works, and we will be sending emails out about that. In our Monday sessions, we talk about which side of the market to trade, and I give you stocks and ETFs that may become ripe for high potential trades. Toni's Market Club is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. If you can't attend our live session, no problem. The recording is available to all of our members just a few minutes after the session ends. For more information and to join, go to tonysmarketclub.com. And now on to this week's economic reports. Not much on Monday. On Tuesday, we have building permits and housing starts. Wednesday, we have crude inventories and the FOMC rate decision. That's very, very important. However, we don't expect the Fed to raise interest rates at this meeting. On Thursday, we have jobless claims and our usual natural gas inventories. And on Friday, we have existing home sales. Again, stay tuned for information about our upcoming free webinar to celebrate Toni's Market Club 10th anniversary. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.